Happy Friday, everybody. Today was planning reports day at USDA, so we got to feel what farmers across the country actually planted going into this season this summer. And then also the stocks number came out, so we get an idea of how much corn and soybeans, wheat we have sitting in storage around the country. That tells us a lot about our demand leading up to this point for this market. Obviously, higher demand leads to fewer stocks, and so we like to see if you're a buyer, or excuse me, a seller of corn and soybeans, you like to see growing demand and lower stocks. And also, that acreage shift is important because that, big changes in acreage, couple million acres here and there, different ways, really do put pressure on prices. However, today we didn't really see that. We saw some surprises, but overall the report was pretty much close to expectations. And we'll go through that really quick to kind of give you an idea of where I think some of this demand might go, some of our supply looking ahead, and then final prices. So diving in real quick, if we look at what was expected going into today, so these are expectations of kind of what I thought might happen. For corn, this first column here, this is out of the reports today. The top is the quarterly stocks endings, or what we have in stocks across the country, and then the second part down here is acreage out of today's report. If we look at our numbers, this average is the average of traders and market traders in today with a high and the low. And then this second quarter over here, this is the March report. So the March ending stocks and then also the March planning. Obviously, quarterly stocks, it relates to last year's crop, so old crop, whereas this acreage would relate to new crop, the crop that we have in the ground right now. So we're working on two different really marketing years when we look at some of this stuff, but it does play in together, as we all know. Ending stocks contribute to beginning stocks next year, so that's important too. But if we look at corn, just starting off with the stocks report, our stocks came in higher than what the market projected, and even higher than what we were last year. Corn demand just really hasn't kept pace. We've seen strong demand for ethanol, but I think the bigger shock, and I'll show this here in a second, is the amount of corn used in feed and residual use, especially feed use, which is really surprising to me because we've got large livestock numbers across the country, and I think eventually we're going to have to start using some of this corn. With high ethanol demand, that is contributing to more DDGs, and so some of that is getting fed. But we've got a lot of livestock, especially beef. Our cow-calf numbers on feed are high. We've got a high calf crop, possibly another year of a herd expansion in beef. And we've also got lots of pigs. We've got lots of pork production across the country. Some of that is due to expansions in the industry the last couple of years, and some of that's the ongoing trade rifts. But a lot of animals, and so I was really surprised to see corn stocks up even higher than what most traders were expecting, and so a higher stocks number really puts a bearish tint on our markets, pushing down prices. Soybean stocks came in roughly about what was expected. Wheat stocks also roughly about what was expected, so both of them neutral. If we look at last year, our soybean stocks are still high, but our wheat stocks are coming down in relation to what they were last year, which is a good sign. So we still have high stocks in wheat, but at least we're working down some of those stocks, and I'll talk about that here in a little bit. So that's the old crop. So kind of a negative news for corn, but not terribly. I mean, the stocks report typically doesn't have as much impact in markets as what the acreage report does. So a bearish tint for corn, neutral for soybeans and wheat. If we look ahead to new crop, looking at what was expected and then what actually happened, we actually saw an increase in corn acreage, which was, again, surprising for most traders. For me personally, this number was a little surprising because we had kind of a rough start to the planting season. It was wet and cold, especially out here in the eastern part of the Corn Belt. But once it dried up, once the skies opened up, farmers really got in the ground, really got going, planted a lot of acres really quick, and then it stayed nice. And I think for many of them, farmers have shown an interest in planting corn. They like to plant corn, but more so they like harvesting corn. I mean, it's very satisfying to see the yields come off corn in the fall. And so, corn is one of those that farmers like to plant it. And if it's good weather early and you're planting it first, if it's nice, you're going to continue to plant because you don't know what could possibly come up later in your soybean planting season or whatever. But we did see higher corn acreage than what was expected, also putting a bearish tint in the market. So between the two, we expect bearish prices kind of heading out of this. And so, for corn, I expect some smaller prices, but we've got strong demand in some areas too. And so I think maybe we could be on the up and up with corn, even though today's market shows a bearish tint. If we look at soybeans, soybean acreage did come down from what was expected. If we look at the second quarter number here, we're still a little higher in soybean acreage than what farmers showed they wanted to intend to plant, about 500,000 higher than what they intended to plant in March. But we're still down from last year in soybeans. It is worth noting that this is, the second time in history that soybean acres have eclipsed corn acreage. Largely that's due to the profitability of soybeans the last couple of years, really driving soybean acres on top of corn. I get asked a lot, if people that planted all soybeans are sad that they planted all soybeans given the drop in prices due to trade rifts and stuff. And most producers that planted all soybeans were able to lock into some contracts, market their grain, lock into some futures contracts early on that still guaranteed them pretty much a revenue over corn, all things equal, of course. But so soybeans, planting all soybean acres, even though the price has dropped, for those that locked into contracts, they still probably are going to see a profit higher than corn. If they didn't, then that's potentially a slight issue, and corn might potentially provide a higher revenue. If we look at wheat, wheat acres were up. This is largely driven by spring wheat acres in the Northwest. They planted a lot of spring wheat, driving up some of that acreage. So if we look at our report, soybeans pretty much neutral across the board. Ending stocks and demand was pretty much where we expected it to be. Acreage was pretty much where it expected to be. Slightly more less acres than what we expected, but more acres than what we saw in the March report. And then wheat, pretty much just slightly bearish. Now we are seeing some movements in the market today, I think driven by the drought in Russia, Ukraine, some of the places that are experiencing some hot, dry weather in the West. So speaking of weather, I also get asked if a lot of this drop in corn and soybean prices is due to the positive reaction or positive growing conditions for corn and soybeans. USDA released their report showing that about 78% of the corn crop is in good or excellent condition. 73% is in good and excellent condition. This is well above what we were last year at this time. And so a lot of people are saying we've got a good crop, it's growing, and maybe that's being reflected in the markets to some extent. I think it could be. I think this is definitely playing into it as well. But when I look at my numbers and I run kind of a price shift looking at weather, anytime we have a crop that is 75% or higher is it rated in excellent condition. 90% of the time, so this is my confidence interval, 90% of the time, a rain in the Corn Belt only results in about a decrease of 10 cents. So we're above that 75% or good or excellent condition. And so we shouldn't be seeing, or at least 90% of the time, we shouldn't be seeing shifts of less than 10 cents in corn, and we are. And so, the other thing that's probably driving that is a little bit of this rift with trade negotiations. And I think that's really important to keep in mind. But, our crop is good, but I don't think that's the only thing driving some of these markets down, especially in corn and soybeans. As you would expect, correlation between early progress and final yields is low, meaning that we can't really say that good growing conditions now are going to lead us to a great crop at the end of the year. However, we've got a lot of moisture in the soil. The condition's good. We got a lot of moisture in the soil, so it's going to take some really hot and dry days, I think, to negatively impact our corn, especially right now during this pollination stage that some of the corn's in. And so, it is supposed to be hot, and a couple of people have forecasted weather, and it does look like several days of hot, dry weather. Here in Ohio, it's in the 90s today, which, at home, it's very hot today. And so, which I'm from, home for me is in western Missouri and Kansas. Moving out here to Ohio, hot days out here, still about 15 degrees cooler and humidity less than western Missouri. So I think it feels pretty good, but it is warm. And so if you look here, we've got slight drought in northern Missouri. Out here in Kansas, they irrigate a lot out here. So the drought concerns really here in northern Missouri. Iowa and Minnesota, a lot of rain, some flooding. But out here in Ohio, we really don't have a problem with drought. So if we take all of this into account, and I run analysis between this current week's progress report and then the end of the year, which I'm saying is week 39, we see about a 7% drop in the good to excellent condition. And so if I figure that in and kind of plug it into some numbers, I'm actually getting a bushels per acre for corn about 1.5 bushels higher than USDA. So I think for this new crop that's in the ground right now, we actually could see a higher yield and higher production than what USDA is projecting, which would also be a bearish tint on markets, and I'll talk corn markets. But we do have some strong ethanol demand for corn. However, if we look at the stocks report that we just saw that just came out, corn use in these first 3 quarters is actually a little bit down from where we were last year. Still higher than 16 and 15, but a little bit down from last year, which is kind of surprising. Again, that higher livestock number, I really thought we'd be there a little bit higher, but a little bit down, roughly flat. However, if we look at feed and residual use only for these first 3 quarters, that's where we're down. We saw a decrease in the use of feed for feed. And so even with our gains in ethanol growth is strong. We're producing a lot of ethanol, a lot of DGGs, and maybe that's displacing some of this feed and residual number. It's canceling out our growth in ethanol, our feed and residual numbers. Now USDA is projecting about 5.5 million bushels of feed use, for feed use for a marketing year average. We'd have to have a big 4th quarter to get there. I think these first 3 quarters have slagged a little bit, so we'd have to have a big 4th quarter. So I don't know if we'd get there. So later on when we see the balance sheet, I'm going to suggest that maybe we think about lowering that feed and residual number down just a little bit for that. So however, I think looking forward, eventually at some point, I think we're going to have to take into account large livestock numbers. We have a big herd in beef, lots of pork. I think we'll have to take into account that. However, if we look at ethanol, so this is food, seed, and industry, which also includes ethanol, we see that growth here early in the decade, but then even this year projecting a growth above what we had in ethanol, and then even a growth next year. So demand for ethanol is good. We're seeing that feed and residual number holding us back on demand. However, I talked a little bit about the supply, and this is kind of the new acreage number of 89.1 million acres of corn across the country, and then my estimate of 175.5 bushels per acre. The 2018 crop would be the 4th largest on record. So making sure we have places for that crop to go, making sure we're building demand in our international markets. Several commodity groups across the state and across the country have worked hard to build market share, and making sure we have that access to that will be important to use some of this corn that we're producing, especially this big production year we're talking about here. So if we look at our balance sheet for corn, I've got a couple numbers highlighted, but first off, this 2017 column here, this is the current marketing year we're in right now that reflects last year's crop. This 2018 crop is the new crop, the one that's in the ground right now. And so if we look at 2017, the supply number is already set. This is last year's crop. This is what we start with. We could see some changes in imports, but probably not. And so this 2017 number is pretty set. If we look at demand, again, that 4th quarter number is going to have to be really big to get to 5,500. And this is, I think it's going to be impressive. And so 5,500, I think, could come down. However, ethanol demand and exports are both strong. And so I think we could exceed those numbers, 1 million bushels. I think we could exceed those numbers for a total use is actually a little bit higher than what USDA is projecting, an ending stocks number that's a little bit less. So I know that sounds a little counterintuitive because we had a higher ending stock today that put a little bearish tint, but I think potentially we could see higher ethanol and higher export numbers than this, potentially maybe leaving it neutral. But if we look towards this year's crop, that new area planted number 89.1, we've got a yield of 174. Again, I think that could be higher. I think it could be 175.5, or at least those are my estimates right now. That gets us a total supply that's larger. This is the current USDA estimate. My supply number is a little bit higher than that. And so more supply going into this new crop. But where I think is interesting is some of this feed demand. I think feed and residual eventually will have to feed some of that higher livestock, so that number could potentially go up. And I think we could see higher ethanol. The big question is what happens to exports. We've got the tariffs or the trade rift with Mexico going on, and so that could potentially limit some of our export numbers in corn. But I think higher ethanol and higher feed residual next year, even above what USDA is projecting, could be possible. And so I think we actually, the corn number, it could be a little smaller than this, but 390 is probably pretty close. And that feed and residual number, depending if it goes up, we could see a little bit higher of a price in corn. So if we look at soybeans real quick, soybean demand, mostly used for oil and soybean meal, is a little bit down in our ending stocks number. They were a little bit higher than what was expected, and so we had, they came in pretty close, but we did have just a little bit extra stocks, and so our use is a little bit down from what it was last year. If we look at the balance sheet for soybeans, a couple of numbers. Again, supply in 2017 is set. This is the old crop. If we look at new crop, exports, the big question is what will happen there. They've maintained strong throughout the year. We've seen some decreases to different countries, but the low soybean price, the price, we've lost $1.50 and more in soybeans in the last couple weeks, and that's encouraging some of our buyers to actually buy more soybeans. And so even though our exports to some countries are trailing off, we're seeing stronger exports in other places. If we look at new crop for next year, again, we have the higher area planted number, and yield, I left yield alone, but I think we could see a little bit stronger of a total supply number. But the big question is what will happen to exports next year, especially with a 25% tariff by the Chinese or more. If we keep retaliating back and forth, I think we could see even a smaller number in exports next year. That drives ending stocks up. That pushes our stocks to use ratio up, and we end up with a lower soybean price. Worst case for soybeans. And keep in mind, these are marketing year averages, so this is a full year, not just this current time or period. But worst case in soybeans, I think we could end up in the lower 8s if these tariffs stay in place for very long. That would be, let's put it this way. So the drought in South America this year, especially in Argentina, has really benefited us, because I think we could even see $1 lower if Argentina hadn't had their problems that they did, their drought conditions that they did down south. So worst case scenario, soybean prices down the 8s for this new crop, but we'll see what happens. This is without any trade disputes. So this is where we could be, if things resolve, which we all hope they do, but with trade disputes, this number would be a lot lower. If we look at wheat, again, the ending stocks report that we had today, or the stocks report that came out today, is for ending stocks of wheat. It is interesting. We see, an ending stocks number that's about the same or a little bit higher than the last couple of years, up around 53%, 54%. And so wheat, pretty neutral. We did see some extra acres of wheat across the country, mostly spring wheat, but wheat pretty neutral in terms of markets. We are seeing the drought. It's pushing some buyers to buy wheat on the Kansas City board today and stuff like that. But overall, wheat's pretty neutral. The interesting thing that I think came out today is the acreage use. So in March, a lot of people asked me, what happened to all our acreage? We had lost about 1 million acres from the year before. So 2017's year, we lost about 1 million acres of total acreage across the country. 2 million of that, 1 million of that in principal crops. And so people are asking, where did all this acreage go? Well, I think we found it today. We saw an increase in principal crops, and then a total increase in acres. So, we found our acreage back. I think this prevented planting number I currently have at 2 million acres. That could be a little bit higher with the flooding in Iowa and Minnesota. I don't know if that's really playing into the markets a lot right now, which I think corn, is. As I look at the markets right now, I can't believe corn's where it's at. My summer outlook for corn earlier in the month, I'm surprised corn's where it's at, and I think it's a little bit of an emotional trade. So I think corn could actually be a little bit higher, continue to move up. I'm hoping it's at the lowest price point right now, and we can see corn continue to move up. Soybeans is a little bit more trickier because of that demand and that elasticity, that rate of substitution between China buying U.S. soybeans and China buying Brazilian soybeans. So soybeans is a little bit trickier, but overall, I think the acreage used for our principal crops, we did gain some of that back. A lot of it in the Midwest, some in the Northwest, a lot of it in the Northwest, some here in the Midwest, Indiana, Illinois, record number of planted acres of principal crops. So just something to keep in mind as we move forward. So a quick summary of kind of what we expected today. Corn, the report overall was a little bit bearish, lower demand use than expected. I was a little bit shocked to see this. Not surprised in the added acreage for our new crop, just because we've had good weather. People have got in and planted and done a lot of work in the last couple weeks. But that lower demand number is really surprising, especially with the lower price of corn. I think corn's really oversold, and I look that price to come back. Soybeans, pretty neutral in terms of these reports. Obviously, we've seen the price of soybeans continue to decline. And you know, if we continue to have this back and forth trade battle with some of our countries, pretty much, you know, all our major, you know, trading partners and commodities, Mexico, China, European Union, Canada, you know, we'll continue to see soybean prices decrease. But stocks were pretty close to what was expected. Demand was about right where we thought it should be. Acreage was close to what we expected as well. Soybean acreage still on top of corn acreage for the second time ever. And then wheat, pretty neutral. We had larger than expected spring wheat numbers, but then ending stocks ended up closer to where we expected. However, you know, wheat, the demand issues around wheat are interesting because we just really haven't seen a driver for wheat demand like we have in the other crops. Corn, it was ethanol. Soybeans, it's been protein and oil. Wheat, you know, I hate to say it, but the only thing that's come out of wheat has been gluten. We now have concerns around gluten, and that's certainly not helping wheat numbers at all. And so it's hard to move stock of wheat around the world when everybody's got large stocks of wheat globally. And so wheat, you know, is going to kind of continue to stay there, but we are seeing stronger wheat prices today, I think largely because people are buying wheat on concerns of droughts internationally. So that's kind of the summary. That's a little bit about what came out of the reports today, at least from my opinion, and some of the numbers that come with it. I do want to promote our Fall Outlook Conference here in Columbus, Ohio on November 2nd. We've got a great lineup of speakers. And so if you're in town or in the area and you're looking for something to do, we'd welcome you to come out. There's obviously going to be a lot of people here. It's a good networking event. It's a good idea to hear from some speakers. I'll probably do a commodity outlook similar to what this one was, but we've got a great lineup of speakers doing areas of their specialty as too. And then as always, here's my contact information. I'd be happy to answer any questions that you might have. And with that, I'll close and just thank you all for listening. Happy Friday and have a safe and enjoyable 4th. Thank you.